Hey, it's Clay at claytrader.com. This will be my top 10 stocks as we head into Tuesday, February 21st. Friendly reminder, the markets are closed on Monday for President's Day. This will be a technical analysis viewpoint, so if you are somebody that uses charts within your trading, or maybe you're just interested in learning more about charts and how they can be used as a tool to help make good decisions as a trader, this will be a video for you. First off, a couple of quick clarifications. Number one, the price you see over here will be changing, and the candlestick you see right there will be moving. That is because the market's still open for a small amount of time, but I like to do these videos when the market is still open because sometimes we can capture some really interesting late day price movement. And then second, I'll be using the 30-minute time frame, meaning each one of these candlesticks represents 30 minutes worth of time. Stock number one here, IBIO, and quite the movement today. Big volume, big gap up. And yes, the price, while true that it has as of right now, oops, let's try that again. There you go. While the price has been pulling back, it's also, within a big gap up. So when you consider that downwards move right there, and then you consider that support down there at $1.32. So actually, let me change that to green to represent support. And then maybe make this all the same color to make the pattern easier to see. So we have our resistance, we have our support, you have the big explosion and gap up right there. And then to make this a little bit more visual, let's put a golf hole down here for you golfers. And what we have here is a bull pennant pattern. So while nothing is guaranteed, is it valid? Is it plausible to think that if the price can turn itself around, come back up to the top of the pattern, and then get a break up through there, that break in and of itself could create additional buying pressure? That's certainly a plausible outcome to have. So if you like bull pennant patterns, you like stocks down below $5, definitely keep an eye on it. Next one here, DKNG. Put this strategically because what I just talked about once again applies. I'd say the biggest difference is instead of being a stock down below $5, it's a bit more, quote unquote expensive. So we have our area of resistance. We have the key area of support right there at $19.60. So again, change that to green to represent support. And then let's just make this all the same color once again. So we have our resistance, we have our support, we have the big gap up explosion right there. We have our golf hole down here. So once again, same general idea, another bull pennant pattern. As I mentioned, the biggest difference being this one's just a little bit higher priced. Next one here, MULN. And as I mentioned in yesterday's video, how the chart was seemingly broken, we just got that more confirmation today that the chart is broken as the bleeding continues. So first update that needs to happen is just based on a foundational rule in charting, which states when levels of support are broken and close below, they tend to act as resistance. So if there is any sort of attempted bounces moving forward where the price attempts to recover, 28 cents going to be that first key level of resistance to watch. As far as levels of support are concerned, yep, there we go. I wasn't sure if it was behind my ugly mug or not, but it's not. Next key level going to be down here at that level, which to give some credit where credit's due, that's where it did bounce today. So good to say that this green line at 25 cents did indeed hold like it did back here on a couple different situations. So it does make this interesting because the last time the price was down here, huge move. Now, let me be very clear. Does that mean for sure guaranteed it's going to do the same exact thing? If only it were that easy. But is it at least plausible? Could you at least potentially build a trade plan around this premise? Yeah, absolutely. So if you like penny stocks, you like to play potential double bottom patterns, keep an eye on it. Next one, PLTR, and the pullback continues. So this is, again, I think I mentioned this in yesterday's video, but all a matter of perspective. Meaning if you're a day trader, flipper, scalper, whatever you want to call yourself, and you bought right there, maybe you bought right there, and your plan was to buy and sell within 4 minutes, well then yes, from that point of view, the chart looks really bad. But from the big picture point of view, everything is still fine. Let me get rid of these lines here so I can, just better illustrate what's going on. So yes, the price has pulled back over the past couple of days, but if you consider what was going on then more than just the past couple of days and consider that the price not that long ago was down here before exploding all the way back up there, all we actually have right now is a bull flag pattern. So slightly different than a bull pennant, but same general idea. No such thing as a guaranteed, but is it valid? Is it plausible to think that if the price can come up here and get a break up through that level, that break could create additional buying pressure? That's certainly a plausible outcome to keep an eye on. So maybe you prefer more so bull flags over bull pennants, or you like both, definitely keep an eye on it. Next one, AMC, and this will mean a bit more to those of you that have watched past videos I've done, but recently I've been talking quite a bit about that pink line 200 period moving average. And yeah, I've been confirmed that this level is just going to be flat out annoying. Not once, but twice today, the price got up above that level, but both times it was just the, hey, just kidding, back down it went. And then once again, hey, just kidding, back down it went. So 545, we'll call it, remains a very tricky, a very stubborn level. And to reiterate, I say tricky because it's not that the price can't break above it. It's not that the price just gets flat out rejected. It's tricky because the price gets up above it and then down it goes. Gets up above it and then down it goes. So 545, we'll call it the tricky resistance moving into next week. But all in all, everything is still perfectly fine. Sure, it's annoying, but as long as the price keeps on putting in these higher bases, which it's been doing, that's the name of the game. But yeah, all eyes going to be watching 545. So let's see if the price can get the break of it or not next week. Real quick, want to take a break and personally invite you to get signed up for this free live online class I'm offering next week. So if you've been enjoying the video and you want to learn more about this tool and how it can and should be used to build consistency, to manage risk, then certainly get signed up for the free live training. If you're watching on YouTube, there's a link down in the description box. If you're watching at my site, there's an area right there on the webpage that you can click to get signed up. So like I said, if you've been enjoying, then definitely get signed up. Next one, TSLA Tesla. And overall, a relatively crazy day when you think about how rough things got, to start with a big move down here. And now this afternoon, a very nice bounce back upwards, but not a massive surprise. Look right where it got rejected, that purple line there, the 50-period moving average, which right now valid at right around, it's hiding behind that number, which is changing, but let's just call it 207.50. So 207.50 going to be that key level right now. And in the very, very near term, you have a little miniature bull flag, bull pennant, whatever you want to call it. But like I said, that's certainly a very, very small term way of looking at things from a pattern perspective. But this is also why I like to do these when the market's open, because check out this candle right now. It is making a move as I speak. So in fact, let's zoom in so we can see it even potentially a little bit better. So there we go, making a move up around that area. So we'll see what happens with it. Market still has about 10 minutes. So perhaps it gets really crazy and you're watching this video by the time it goes on YouTube and you're thinking, Clay, the price closed way up at 210. Well, in that situation, now you're looking at a breakout that's already occurred. And now you get to ask the exciting question, okay, wow, it broke out. Is this the breakout, the start of something even bigger? So keep an eye on it and we'll see what happens. As far as levels of support are concerned, if there's any sort of pullbacks, key level to watch right now is going to be down there right around the 198 mark, which you can see did a good job of holding that support there. And then once again, held a support right there during the early afternoon. Next one, GMBL, and this is what you call a good old-fashioned gap and trap, meaning the price closed right there on Thursday, opened up right there, hence a gap up. And then after that, I mean, to think that there were some poor souls that bought right there, because after that, essentially straight down it went. So gap and trap would be the best way to summarize today's price movement. But yeah, there's no doubt about it. It's a very ugly looking chart. But for you long-time viewers, you know what I'm going to say next. But there can be opportunity in the ugly. And that's where 7 cents comes into play. Meaning if the price gets a little bit more ugly, comes down to that area, then we have some history, which here, last time the price was down there, a very nice move followed. Like I said on a previous stock, I wish trading was this easy. Just because it's bounced from there before does not mean for sure guaranteed it's going to bounce from there again. But is it at least valid? Is it at least a plausible thought to have? Absolutely. So if you can, assuming you can be, be disciplined, honor your risk, honor your stop losses, then you could structure a very nice risk reward scenario here. Because even if you get a modest bounce compared to what was being risked, you could be looking at a very profitable situation. So if you like these sort of situations and you like stocks down below the dollar mark, keep an eye on it. Next one, SRNE, and overall, so far, so good. Been tracking this one quite a bit ever since the big movement down and saying, these ones like to make moves. They like to bounce. And as of now, this bounce continues. So pulled back a little bit here, but overall, what matters most is it continues to put in these higher lows, and that's what you want to see. If you picture those as stair-steps, you want to see those stair-steps progress in the upwards direction, and that's exactly what we have. So as far as levels of resistance now headed into next week, key level to watch that you got to think a bunch of people will be keeping an eye on is that 32-cent mark. So as I said, no guarantees, but is it valid and plausible to think that if the price comes up here and gets a break up through 32 cents, that break could now generate that much more buying pressure? In my mind, that is a more than plausible thought to have. In terms of areas of support, the purple line there has finally leveled out. So moving forward, the longer the price can stay above that purple line, the better, and the more attractive the chart is going to look. And the more attractive the chart looks, the more eyeballs it will bring into it. So in some senses, it's like a self-fulfilling prophecy in that regard. So very, very good that that the moving average has not only leveled out, but actually ever so slightly started to trend upwards. So let's see if the price can stay above that level all of next week. Next one here, AMZN Amazon. And first update that needs to be done comes about based on the rule that I've stated earlier, that when levels of support are broken and closed below, they tend to act as resistance. So from a previous time where I talked about and did analysis on this one, 98.25 was that support, but The price broke below it slightly yesterday, leading to a gap down today. So that's going to be the next level. But to be fair, nice little bounce here in the near term. Is it the start of something bigger? We'll have to see on that. But a good first kind of test of quote unquote strength will be how does the price behave if it can get up to 98.25. And this will mean a bit more to those of you that watch the video. And a quick plug for that free class. Get signed up. Check it out, The Power of Charts. I put that green line in there a long time ago. And wouldn't you know it, look right where the price came down and found some support. Now, I'm not patting myself on the back, but I am patting charts on the back. They're a great tool, so go get signed up for that free training. But just a classic example of a support, finding some buyers and then getting to bounce back upwards. So nothing has changed here. This level down here still remains that key area of support at right around 95.75, but a great example of it finding buyers, now bouncing. And like I said earlier, now it's just a question of can this bounce continue and get up to 98.25? Let's see what happens. Next one, TQQQ, which is an ETF that measures the NASDAQ. So if you believe the NASDAQ market as a whole is going to go up, this one will also go up. Big difference here being this just allows you access at a much lower price point and track this one on a very routine basis. Very rough day today with a gap down. So really moving forward into next week, there are two key levels that you got to think a whole lot of people will be watching. First key level, which I talked about yesterday in just a different regard, is that pink line there, 200 period moving average. As you can see, it decided to act as support. That's right where the price closed on Thursday, but today it did not hold with a gap down. So therefore, now it would be considered an area of resistance. So if any sort of continued bounce attempts to occur, right now value at 24.60, we'll call it, is going to be that main area of resistance that you got to think a lot of people are watching. So you can bring in those talking points of self-fulfilling prophecies. And then on the support side of things, the level that you got to think a whole lot of people are watching now is at 23.30, which going back here, you can see did a good job of holding as support. And then once again, held as support right there. So if the price does come back over, then you have some very fascinating questions about could there be another bounce from that area? You're going to have shorts wondering, okay, if it breaks, that could be a good short entry. So like I said, a lot of different trade plans depending on people's strategies and perspectives, but the underlying dynamic here are just two very well-defined levels. Again, that 200 period moving average as resistance, and then the 23.30 mark as support. So that wraps up the top 10. Again, if you like what you saw here, then I want you to get signed up for the free live class. It'll be next week, Thursday, February 23rd at 7 p.m. Eastern Time. So I hope to see you there. As far as these top 10 videos are concerned, if you enjoy these, please do two things for me. Hit the like button, leave a comment below. Tell me what you traded today. Tell me what you're watching next week. Comments and likes that communicate to me that you're enjoying. And as long as I know you're enjoying as a viewer, I will continue to put in the required time and effort to get this content out to you. So again, get signed up for that class, hit that like button, leave a comment below. And again, the markets are closed on Monday as the friendly reminder. Have a great weekend.